Before you invest in real estate 2021, watch this. Investments are often as simple as saving during a bank or as intensive as trading via the stock exchange. Based upon the complexity of the mode of investment, time and energy are expended. Investing in land is a choice to consider for those trying to find investments that involve an extended span of your time. There are 5 main sorts of land investments. One among them is commercial land. Here's how commercial land works and the way you'll add it to your investment portfolio. Why choose investing in commercial real estate? An investment in commercial land generally entails an investment amount that's an outsized sum for any single retail investor to supply. The 4 most common ways of investing in commercial land are via land investment trusts or through fractional ownership. This mode of investment reduces a load of entry into CRE for retail investors by lowering the ticket size. But a discount in ticket size doesn't necessarily mean an investment option is sweet. CRE investment comes with certain benefits over other traditional investment options. Being land, it's insulated from market fluctuations. As a long-term investment option, it's stable and mostly features a consistent rate of return. It comes with a lock-in period that safeguards your investment while assuring returns. Any special purpose CRE during a key location is often a literal gold mine because it is going to be well wanted by a distinct segment of tenants, thus also assuring that a renewal of the investment keeps giving returns as a passive income. How to begin investing in commercial real estate? Investing in commercial realty often wipes out a private capacity, but the high cost of investment makes it difficult for one investor to take a position in the specified amount during a commercial land entity. The favored method of investing in commercial land is via investing in REITs, or fractional ownership. REITs. These work somewhat like mutual funds. There are fund managers who manage a REIT, and your investment forms a neighborhood of the investment pool that's divided across multiple assets. These assets are selected by the fund managers to support their historic performance and therefore the market dynamics. The returns from all the assets are clubbed and distributed to investors supporting their investment within the REIT fund. Fractional ownership. This helps get like-minded investors to pool their investment amounts into owning an asset. The minimum ticket size normally stays within multiples of lakhs. Supported by their risk appetite in funds, individual retail investors can own one or more fractions of an asset, granting them some of the ownership. Returns from rent and capital appreciation are paid at the ratio of the ownership of every investor. The major difference between the 2 modes is straightforward. During a REIT, whether you wish it or not, a neighborhood of your investment might be sitting idle in an asset that doesn't attract tenants for a few reasons. The sole thanks to prevent your investment from being a costly paperweight are going to be to withdraw from the fund completely. Whereas fractional ownership gives you complete control over your choice of the asset. In fractional ownership, you'll still stay invested in other profit-making assets and stop, sell, or trade your ownership fraction of a non-performing asset with another. How to set about goal-based investing in commercial real estate? Goal-based investment works almost in an equivalent way as an investment in the other traditional model. CRE is right for long-term investment goals. So if you're looking to take a position for love or money, but 3 years at a stretch, you ought to probably look elsewhere. In long-term investments, goals are bigger, well-planned, and relatively laid out across 5 years or multiples thereof. The simplest and most readily available choice to invest in CRE at any given time is commercial office space, closely followed by warehouses. The rarer variety turns up in laboratories, manufacturing units, or assembly floors. Office spaces. Office spaces have a tendency to be stable investments for 4 to 5 years a minimum if the business has not found a head office or corporate office. In such cases, the lease tenure could go up to 10 years with the likelihood of subsequent renewal, which can be requested by the tenant warehouses. General-purpose warehouses are used for storing goods in transit as a supply hub or as a support for a producing or industrial unit nearby. If the tenant is a longtime e-commerce player, and therefore the business is sweet within the surrounding area, you'll rest easy on the steadiness of the investment for an extended period like 15 years. If not, most warehouses accompany a lock-in period of 5 years and a lease tenure of 11 to 12 years. Laboratories, manufacturing units, or assembly floors. The last category of producing, research, and industrial spaces are rarely vacated by tenants. The only opportunities that you simply can get for investing in them is when new assets happen or some tenant decides to sublet some of the asset. The occupancy stays steady as a rock, with tenures crossing 20 years or more. capital appreciation is steady and rental returns continue. Based on what you're trying to find, you'll prefer to invest in any of those subclasses as per your ideal financial goal. What factors to think about before investing in commercial real estate? As with any quiet investment, proper research should enter the factors that are crucial for CRE assets. Here are the highest factors that you simply should bear in mind before investing in commercial real estate. 1. Location. Location plays an enormous role in choosing how your asset performs. This is true for residential as well as commercial land. Accessibility via roads and railroads, major highways, proximity to airports, and seaports are factors which will make or break the worth of the asset and the way much it can appreciate over the course of your time. A well-connected spot on the brink of harbors and ports could be great for tenants who are into manufacturing and either export to or import from other countries. The same location won't work great for businesses that deal in software operations. When investing during a major urban market, confirm you furthermore may keep a tab on the micro markets in and around the asset you're curious about for any changes which may affect your investment. 2. Tenancy. The existing tenants, their economic condition, and therefore the terms that they're currently on are factors which will tell you an excellent deal about the viability of the asset for the long term and the way far your investment goes to be beneficial. Historical data about the lease terms and vacancy will offer you a thought of what to be prepared for just in case there's a niche within the tenancy during the amount you opt to take a position. General-purpose office space is probably going to possess more chances of getting occupied compared to a special-purpose warehouse or laboratory. However, the latter can score over the previous through better capital appreciation and a way more stable tenancy. 3. Market dynamics. It is true that commercial land doesn't suffer from an equivalent market shift as most other traditional investment options. However, changes within the market do affect the percentage, the rentals, and therefore the stability of occupancy. A really relevant case is often made up of the COVID-19 pandemic. With people not getting to office spaces to figure, quite few markets saw dips within the rentals from commercial office spaces. Keeping an eye fixed on what businesses are stirring the economy may be a good way to know which commercial land asset is the one you ought to be searching for next. 4. Documentation. If you're stepping into CRE investment on your own, without the assistance of an advisor, it's ideal to possess adequate legal support to require you through all the legal paperwork to see for any hidden charges, ambiguous ownership clauses, among others. In case you're opting to travel the REIT or fractional ownership thanks to getting into CRE investment, most of the above factors are going to be taken care of by the team that's handling the investment, sale, or resale of the assets. The foremost important thing you need to do then is fix a goal for what your investment should achieve. What do you have to remember before building your portfolio in commercial real estate? People normally tend to magnify proportions when speaking of the returns they gain in any quiet investment, which will be a part of the story, but not everyone has an equivalent risk appetite, not an equivalent level of forbearance and patience to ascertain a long-term investment through to its end. The key points to recollect once you plan to make a CRE investment include: investing in CRE is useful only within the future. Investing in just one asset class isn't a wise thing. Learn to diversify. While CRE may be a robust asset, it's its risks. Watch out for guaranteed returns. Different markets behave differently. One thumb rule doesn't apply to all or any. Vacancy rate, and therefore the market rental rate, play a serious role in choosing the rental returns. If an asset doesn't show promise of appreciation in 5 years, ask your financial advisor or investment manager. Holding assets is sweet, trading them is additionally good. Use your discretion. Was this video informative enough? Let me know in the comment section. With this, we come to the end of this video. I hope you all enjoyed watching this video. If you do, don't forget to like, share, and subscribe to our channel. See you soon in another fun video